Hi, this is Shane with the Rational Trader. It is Tuesday the 18th, plus 60 for me today, which is basically scratch. And in this environment, scratch is a win. The average daily range here is over 100 points now, so there's a lot of volatility in the market. Volatility means randomness. There's a lot more randomness in the market. And so if you choose to trade these conditions, then it's basically a coin flip that you're either going to do well, you can do really well, or you're going to take a max loss. So not taking a big loss or a max loss, our losses are never big, but not taking a max loss on the day is a win in these conditions. Let's take a look at the actual trades. I didn't start trading until 7:05. The idea was to let it settle down. So let 30 minutes go by. Let any news come out. Get long here. And does that hit first target? No, it scratches. All right, and then try to get long again. Take a loss. All right, and then get long here, get first target, and then get stopped at scratch on the second contract. This business here is what has me worried in the other chart we'll look at. This value area high ascending along with price. That's a problem that I'm concerned about. Here, not so much, because the price action patterns are much more complex for what we're looking for predictions. We try to get short there and take a stop. A little bit of a nick actually there. And then this is the really painful one right here. So short here, this is a beautiful entry short right here. And the first target is there, so take one off. Add there on this break right here. All right. And then start trailing by 20 and you get nicked. And so we miss the rest of this move because that's a 20-tick trail, and we needed like 23. So that's unfortunate. And then short that for a loss, and I think that's it. Yeah, then we just start rotating around the POC, and that's the end of the day. All right, so let's take a quick look at, I don't have a whole lot of time tonight. Let's take a quick look at what we're testing out here. This is more testing and data gathering. So low volume nodes would be testing, and at the edges was data gathering. So same story, we didn't start till 7:05. So here we're at the edge of the value area, and this looks okay when I look at this, because I want to get a prediction to see if I'm going to blast through that. Or I want that prediction right there to see if I'm going to bounce off of it like I do. So these ones mean the machine learning system is making a prediction. The prediction is coming back to do nothing. That's okay. It's set up like that right now to be really strict on how clear the signal is. Here, let's see. This is the same kind of problem right here, right? Where I'm worried about the price advancing along with the value area at high or low, high in this case. And since you're at the edge, you just continually make predictions, and that's not what we're after. What we're after is much more, we want surgically precise levels to choose from. So I'm a little concerned about this kind of stuff here. What actually happens? That's really odd looking. We get long. One gets, oh, I see, we get long. Oh, look at that. We get long, and the fills are one tick apart. And so the stops are one tick apart. And one of them gets stopped out. And the other one gets to plus 15 and scratches. Oh, that's interesting. Let's see. So here we're at low volume nodes, and that's what these are, right? So these if it's an orange bar, then it means check and see if you should be making predictions. So here's a low volume node. Here's a low volume node. This is basically the same node as this one right here. I only keep track of the ones that are closest to price, above and below. So that's why it kind of looks like this node up here disappeared. It didn't. It shifted up, but because I only care about the ones that are just nearest price, there's a blank spot there in the chart. 297 is a short, which I should be taking, I think. Yeah, so why didn't I take that short? That's an interesting question. That's got to get looked at. 228. I should be short there. There. Same thing. 220. Let's make sure. Yeah. So I didn't short that either. That's interesting. Why not? Okay. So I got some problem there I got to look at. All right. So now let's go back to data gathering. This is kind of exactly what you want right here. Do you see how the value area edge is flat? Okay. There's no and the price runs right up to it and then bounces right off of it. This is exactly what I want in terms of get up there. This is where I want to be making predictions. So I like what I see there. You don't know what's going to happen here. I might just blow through. So I want to be making predictions as I approach that, and then if I don't get through it, I want to make predictions as I bounce off of it. And the problem is when this happens here. At least I think this is a problem. We'll see. It's really difficult. The current conditions are so wild that it's hard to. You got to be careful about drawing conclusions. Let's see. So here again, we run up and bounce off, and there's a 298 right there. I should be shorting that, and I'm not. There's something a little wrong with my system here. The simulator is not shorting that, and it should be. Instead, we get long here and get nicked by a tick. That is immensely painful, particularly since it gives you this pretty nice run here. Okay, so a nick, but a nick just means when I see this, particularly in a simulation where I'm gathering data, what this tells me is that okay, I got the machine got it right. You want to get long. Getting nicked means that just the volatility is too high. All right, and we know that. We knew that coming in. The average of the range is over the moon, basically. Okay, so that's fine. I'm still thinking about why I'm not shorting that. And why I'm not shorting that. I should be shorting that. Okay, so there's some logic problem there. I think what's going on is part of this chart has a rule that says if you're above the value area high, in other words, if you're up here, you can only go long. And if you're below the value area low, you can only go short. And I'm thinking that maybe the logic is a little confused here, and it thinks I have it coded wrong, where it thinks that just the way the logic's working out, it thinks that it's not allowed to go short there. So I will take a look at that. That's probably what that is. So some error on my coding error on my part. And then we try to get long there. Short here again, which we don't take, but we should be. Okay, so there's let's see, short. You won't take that one because you need a down bar. But we should be short there for a or for 20 ticks in a scratch. Okay. And then let's take a look at this here. Yeah, see, so this is what I'm concerned about here. I need to think about how to approach this problem, if it's really a problem. I think it is. I think it's something we want to take care of. I absolutely love this here. This is exactly what I want to see. Make predictions. That's a nick. of the high at the value area edge. I like that. The prediction is do nothing, but we'll take care of that when the markets calm down. Right now, there's too much noise in the market to get decent signals. So here's a similar problem where there's a 128, and we really ought to be taking that, and we're not. 197. So there's something there I got to look at. So that's not quite right. 127, 227. So I should be shorting that. I should be getting long there and taking a loss. Here's a 298. So this is looking at, hey, it says I think I'm going to bounce off that node instead of going the other way. And then we rotate around the POC at the end. Okay, so interesting. I think that I got to go fix. We can't get a good read now on how well this is or isn't doing, because this does not appear to be working correctly in terms of the discrimination we're making on direction. So I got to fix that. All right, so we'll take a look at that. But still, I can see that there's something I need to do here. I'm concerned about this. Okay, all right. So then we'll see what tomorrow brings. Again, single contract traders it's very, very difficult right now because the pullbacks are so deep. You end up getting stopped for scratch, and then you're not, in other words, you're not making anything, and so just the normal losses that come along during trading aren't covered, and so then you end up missing the nice trade that will pay for everything. That is what it is. There's nothing to do about that, but recognize that you're flying a kite in a windstorm or a tornado, and so your kite's going to get destroyed. Or you're sailing a boat in a hurricane. Okay, you're going to sink because of that. All right, and it is what it is. So recognize it for what it is, and either be very, very cautious, which is what you see me doing. All of my hey, be very careful rules are in effect here, or just stand aside. All right, a single contract trader should really, I really think you should need to strongly consider standing aside. Okay. Until it settles down. You can't survive this kind of violence in the market. Okay, so we'll see what tomorrow brings. I don't know. I have no idea when this is going to settle down. It's been volatile for a really long time now. We've been above this yellow line, which is 80 points of daily range, for 8 months, 7 months. A long time, much longer than I would have expected. It really looked like we were settling back down here, and then we didn't. We just went, it just stayed volatile and popped back up, and then it looked okay. Oh, here we go. And then anyway, I think right now the pundits will tell you that it's fear about the trade wars and stuff. If we look at the chart. This chart doesn't look, if you ignore the range, this chart looks nothing spectacularly weird about this chart on the daily chart. You've got a trend line right here. It's being tested. All right. The 30-minute chart is another story. When you understand that you're looking at a 30-minute chart, the size of these moves is huge. In one day, all of these are just gigantic moves. They're huge moves, and then in both directions here. All right, same thing here. Right, I guess to there. Here, a lot of people get faked out when it falls back. That's a big pullback. That's 80 to, so 30 points. It moves back, and then it cranks higher like that. And this day here. Just this kind of day is just insane to try to trade. Look at this, all the way down to here, all the way back up, and then all the way down again, and then all the way up again, and then down even further, or down again, but not quite so far. But it's still really big. 93 to, it's still a 20-point move down. So dangerous waters. Okay, be careful out there.